Some of you guys may be depressed about what's happening right now this year, especially now with Bitcoin being at 63,000, 64,000, or 65,000. Guess what? Look down here, 2024 year to date, bottom left-hand corner. We are still up 41% year to date when measured in USD. When measured in euro, Bitcoin is actually plus 46%. Think about that for a second. How can Bitcoin, first of all, be up 41% in USD, but 45% in euro? Well, that's because the euro has been dropping against the USD, right? So that's the thing. You have fiat fluctuations, obviously, right? But overall, every single one is just getting weaker when compared to Bitcoin because they're all being inflated and there's shenanigans all over the place, okay? Wherever you go, not just in the US, but in Europe, in UK, in Australia, in Canada, in Mexico, okay? There's shenanigans going on and inflation is causing people to lose their purchasing power. But my point is this, despite the volatility, despite the bearishness that some may have, know that year to date, Bitcoin is still up 41% when compared to USD and up 46% compared to euros. And like I said, shenanigans, they will never stop. In the US, we're closing in at 35 trillion in debt. Our just interest payment alone is going to be higher than 1 trillion per year, okay? And the government has no way to pay that back, no way to stop it. They have no plans at all to cut down the spending and raise enough money to pay back the debt. There are no plans for it at all. Take a second to think about it. It's like having a credit card with no limit and you're just running up the debt every single month and you're just trying to figure out how to pay the minimum back. And a lot of people do live like that. And guess what? They eventually go bankrupt. Okay? Because that is not sustainable. But as a country, that's exactly what's happening. And it's not just the US, it's every country around the world. Think about it. The debt keeps going up, interest keeps going up, that minimum payment, yet there's no way our governments can ever pay that back. Think about that for a second, right? That's why we have Bitcoin. That's why we have Bitcoin. The average fiat loss across 2.6 billion people is 45% over the last 4 years, right? Some of the worst inflation countries, or inflated countries, I should say, in the world, okay? So again, it's not just a US thing. It's around the world. People are losing their buying power right in front of their eyes and they don't realize it, right? That's why we have Bitcoin. That's why the whales or the diamond hands are still accumulating. I mean, this is a very telling chart. Very, very telling chart. This shows inflows to accumulation addresses, basically long-term holders or whales. And you could see how it's increasing, not decreasing. So who's actually selling? Well, paper hands. You could argue retail investors, right? Maybe the miners, okay? You could also say paper hands can include Wall Street. Wall Street have been selling. ETF outflows have been increasing, right? But nevertheless, paper hands could be these big Wall Street types that don't understand or doesn't want to understand, right? But those that do, the diamond hands, okay, the long-term holders, they are accumulating because they know that fiat is garbage. It's going to go to zero. All of them eventually do. And if you want to preserve your wealth, that's what you do. You buy Bitcoin. Short-term cost basis. Okay, what does this mean? Well, this means right now, short-term holders, their average cost for Bitcoin is 63,007. Okay, so we have hit that a couple of times, but generally speaking, that is a really good kind of bottom point, reversal point, right? And we were just there today. We hit 64,000 and kind of bounced off. That's why, I showed this red line, right? That's right there. That's actually a short-term cost basis. And that happens to be a support slash resistance, right? So are we going to see a big turnaround now that we have hit it? Quite possibly. Quite possibly. Now, I did mention the ETFs, right? We had so far this last week and so far this week, we had massive outflows. But if that happens to stop, right, we're going to get that reversal. Right now, there are a lot of paper hands. A lot of it is from Wall Street, right? But here's the thing. Do you guys remember, any of you guys old enough to remember when gold spot ETFs debuted? Gold was stagnant for decades upon decades before spot ETFs were approved. And then what happened? It basically never looked back, right? And you know what? It took, I have a thing here I want to show you guys. Maybe I closed it. But it took gold 4 years, okay? I should say gold ETFs 4 years to cross the 15 billion net inflow. Bitcoin did this in just 5 months. Actually, that's wrong. That's like 3 months, 4 months, right? Not 5. I don't even think Bitcoin ETFs have been out for 5 months. Maybe it did. But nevertheless, point is, Bitcoin ETF, the way Bitcoin is moving right now, the way people are buying, especially institutions, right? We're way ahead of the curve, especially compared to someone or something like gold. If you want to comment on anything I've said in this video, make sure you head over to the Roundtable. The Roundtable is a new social media platform created for conversations. And best of all, it's spam-free, bot-free, unlike here on YouTube. And you could have conversations with me and others like Altcoin Daily, Scott Melker, Mauro Nafal, and many others are joining daily. And you also get rewarded in tokens for doing so. So check out the new Roundtable. Click the link in the description below.